Welcome to Shadow of Truth, and today is Thursday, July the 14th, 2016, and your hosts are Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org, and this is our latest market update. Thank you all for being here.
But now that you mention it, that's what I did want to talk about. What's going on with the stock market and the metals.
Well, the stock market, they've hit how do they like to say it? A new all-time high. It's just ridiculous, especially in light of the all the QE that they're talking about all over the world now.
Well, it's the central banks that are pushing up the markets. There's probably some pension funds that are buying it because they get money in that they need to put to work. But it's the central banks that are pushing the stock market higher, and this is really it's not going to end well.
I think this is an act of desperation almost. That's what it seems like. It's what it feels like anyway.
You know what? I think it's more than that, though, Rory. Dr. Roberts emailed me earlier, and he's like, they're consistently driving gold down by huge chunks and pushing stock averages up by huge chunks. And he said, and we are supposed to be in an economic uncertainty environment because of Brexit. And I said, well, the central banks are cooperating to push up stocks and keep a lid on gold. But the thing about the metals is that they're having no success pushing them lower and keeping them down. Rory, they're throwing an ungodly amount of paper at the COMEX.
It's unbelievable.
And there's just too much pressure to push the price up from the physical market. And I'm pretty sure the central banks are largely out of gold that they can lease out to the banks so the banks can dump it on the market, because the best way to push down the price of gold is to dump large chunks of physical gold on the market. That's what happened in 2011 when gold took a 200-point drop in like 30 seconds. And apparently, and I don't know if it was ever confirmed, but it was said that something like 400 tons of gold was dropped on the LBMA. And I saw a story the other day. Apparently, the Bank of England is now one of the gold bar custodians for GLD. And the thought is there that the Bank of England is either taking GLD bars and leasing them out, or leasing Bank of England bars to GLD in case there's stock for gold redemptions. I don't know, but in the original prospectus, it's HSBC who's supposed to be the custodian. So there's something nefarious going on with the Bank of England all of a sudden acting as a vault custodian for GLD.
Well, there's always something nefarious going on with those guys. They're a criminal operation. HSBC and the LBMA, they're both highly suspect on their best day.
That's right. But see, I think they're largely have run out of gold that they can lease out. It's been hypothecated 100 times over, as we know. And what's going on in the stock market? Well, first of all, if you noticed, all of the chairmen of the Western central banks gathered at the BIS headquarters on the night of the Brexit vote. And I know they were there to game plan what they were going to do if the Brexit happened to pass, because we were told that there was going to be economic Armageddon if Brexit passed. Well, Brexit passed. Where's the economic Armageddon? Not only is there not economic Armageddon, all of the stock averages globally are hitting new record highs. So to me, it tells me that they just decided they were going to buy stocks and try and create a wealth effect. But I actually think there's something more devious going on underneath. And it reminds me of the famous quote from Mayer Rothschild. And I don't know exactly what year he said this, but the quote is, and you know this quote, "Give me control of a nation's money, and I care not who makes the laws." And the reason for that is because fiat currency is a wealth confiscation tool.
Exactly.
And this is what I said to Dr. Roberts. I said, here's the biggest issue. They are not stupid. They know that pushing up stock markets will not stimulate real economic activity. So what's the purpose? Now, that's not to say I think Janet Yellen's an idiot, and I don't think she knows what she's doing. But as she was put in that spot to give it quote unquote academic credibility because she came from Stanford, and she just follows orders. She gets orders from a higher power.
From the BIS.
Right, exactly. And a higher power, which would be Soros, Rockefeller, Rothschild family, etc. So, I mean, what's the purpose of pushing up the stock market? They know it's not going to stimulate real economic activity. We haven't had real economic growth when you adjust for inflation since something like 2006, maybe even 2005, depending on what you want to use as a real GDP deflator number, because it's not the government CPI number. That's not the real inflation number. And I said the stock market's being used as the last conduit of large-scale middle-class wealth confiscation. And my definition of middle class isn't what the mainstream media would call middle class. My definition of middle class is everyone below the upper 0.5%. Because if you're not above the upper 0.5%, you don't have enough money to buy your own politician or your own central banker, and therefore you're middle class. And most of your assets are in fiat-based investments, and that's where most of your wealth is, with a large part of it being your house. And they're confiscating all of that. They're using printed money to confiscate it. And that to me is what's really going on with what they're doing with the stock market. And there's a good friend and colleague of mine sent me a really good comment that I wanted to share, and I'll probably put it on my blog also. And he said, I believe this quote-unquote bubble and its subsequent popping is all by design. I concluded some time ago that the establishment would like nothing more than a full-blown Great Depression 2 to the nth power. There are so many poor people now they won't notice. It's to pilfer the remaining fake paper wealth from below the 0.5% to the 20%. And he said, basically made the point, there's no wealth below the top 20%, which is true. And I would say there's no wealth below probably the top 5 or 10%, because everyone who owns a house is mortgaged up to the hilt, and they've got car leases, etc. So on a true mark-to-market basis, including debt, probably everyone below the 0.5% doesn't have a net worth to speak of.
And if they do, like you said, it's not real. It's digits on a screen.
Right. And so what they're doing here is they're pushing up the stock market, keep people spending, keep people making bad spending and investing decisions. Oh, I got to buy more stocks because they're going up. Thank you. Here's your stock. Thanks for your money. See you at Armageddon. See you at economic Armageddon. Oh, I got to buy a house because they keep going higher. And you're buying a house now is suicidal.
Suicidal.
Yeah. And yet people are still doing it. And the government's feeding them the heroin to do it. Every time I turn around, they're rolling out an easier credit mortgage program. I mean, you can get basically, it doesn't take a lot to qualify for a 0% down payment mortgage now.
Well, it's the same thing they were doing in 2005, 2006. I mean, they're, like you said, they're loading up, they're loading the wheelbarrow at this point.
Exactly, and they're doing it under the guise of, well, everything's more
fine.
Rational and safer now because we reformed everything, and what happened in 2005 to 2008 can't happen again. It's happening right before our eyes.
Yes, and I think that what's going to happen, Dave, is that when the stock market does come down, that it's going to suck dry any remaining wealth that's in 401ks and IRAs. It's just going
That's exactly right.
It is going to completely evaporate those accounts. They're going to be decimated, and if there's not going to be any so-called recovery after that. I believe that the stock market is going well below 10,000, probably in the 6,000 to 7,000 point range, like where it was before. and then when it hits that bottom, it's not coming back. That's my
Yep,
belief.
I agree with you 100%.
And everybody that's looking at their 401k and cheering it on and going, new all-time high, great, everything's beautiful, buy a new house, buy a new car, buy this, buy that, all going to be gone. All going to be taken away.
That's right.
And like I said, not coming back. And none of these people have gold or silver as part of their portfolio. They probably can't say gold or silver unless they're referring to jewelry. Seriously.
Yeah, it's crappy jewelry.
10 carat.
Speaking of the metals, and I wanted to come back to that also because that was one of Dr. Roberts' comments. They're pushing down the metals in big chunks. Well, guess what? It bounces back. I mean, yesterday silver was at its yearly, at its highs of the rally that we've had since mid-December in the metals. And it didn't feel like that was going to be the case on Tuesday, did it, when they were hitting the metals?
No.
And silver bounced right back. Gold bounced right back. And they hit it again overnight. I mean, last night, gold and silver, before I went to bed, were flying in the Hong Kong and Shanghai and Indian, the prime time Hong Kong, Shanghai, and Indian markets. Gold and silver were flying. And I wake up, gold's down 20 and silver's down, I forget, 30 cents or something, and they're bouncing back again. But here's an example of the amount of paper that they're throwing at this, okay? On the COMEX, there is 25.8 million ounces of registered silver, meaning there's been 25.8 million ounces that have been designated to be available for delivery into the September contract, which is the next front month contract. So it's the most actively traded, and it's the next large delivery month for silver. In fact, it's the largest delivery month of the year for silver. Against that 25 million that's been made available for delivery, there's 157,000 silver contracts open.
Oh my God.
Representing 785 million ounces.
You mean an entire
silver.
year's worth of global production?
Almost an entire year. There's 31 times more paper silver in open interest on the COMEX just for the month of September than there is the total amount of silver that's been made available for delivery. And then someone like Bron Suchecki would say, oh, well, it doesn't really matter because all that silver is potentially available for delivery. Okay, well, then let's look at it this way. You got 785 million ounces of paper silver just for September. I'm not counting all the other months. Against 151 million of total silver on the COMEX. So that's 5 times more silver in the form of paper silver just for the September contract than there is all the silver in the COMEX. And these people are saying that the COMEX isn't a manipulation tool.
Does the COMEX, I know that the COMEX matters because it sets global price currently, sets the global exchange rate for gold and silver and other commodities. But in the grand scheme of things, it seems like that the decoupling from the physical and the paper seems to be at a stress point right now, and it seems like that stress is growing, and as we move every day closer to the fall, which is when the real season, gold and silver season, begins. As you said, September is the largest delivery month for silver in the year. I mean, don't you think that that decoupling could show up in that time frame, in the September-October time frame, and that we could see some real major changes, or is that just too speculative to even contemplate?
You know what? I'm glad you brought that up because I wanted to mention that anyway. And I just have a gut feeling, and I was sharing this thought with Bill Midas Murphy yesterday, And he said the same thing before I even said anything, and that is, it feels to me like we're going to have a very large move in the metals and the mining stocks sometime between now and the end of the year, and I think probably sometime before Thanksgiving. And you're right. I mean, the COMEX fraudulent paper gold and silver is setting the global price for silver and gold. And I think the Chinese and all the other entities that are buying massive quantities of it are loving it. In fact, I wouldn't even be surprised if the Chinese aren't in there shorting paper silver and paper gold, because the Chinese have been unexplainably importing a boatload of silver recently.
Yes.
And in the mainstream media, if you notice, all we're hearing about is how the demand for silver eagles is declined in the last couple months. And that's easily explainable. I mean, Americans are running out of money. I mean, are you going to buy a roll of silver eagles, or are you going to put a tank of gas in your car so you can take your kids to school? Exactly. I think I know which one's a little more of an immediate need, and that's what's happening. But the point is that, I mean, let's just say 45 million ounces of silver are sold in the form of American silver eagles. That's 5% of the amount of silver that's produced in a year. Who cares? At the margin, silver eagle demand does not drive the price of silver. And that's what makes this idea that JP Morgan is buying silver eagles so idiotic. No one cares about the silver eagle market except for dealers who are, they care about their premiums. Quietly, China in the last couple months has all of a sudden, they've woken up again. There was a little bit of lull in their import demand, but all of a sudden they're importing a lot of gold again.
Yes, a lot.
Yeah, and at some point, and I don't know when. I mean, I thought it would have kicked in the spring, and it didn't, unless the demand is being satiated by smuggled gold, which it easily could be. But at some point, India is gonna wake up again, and you're waking up a sleeping giant there, because they have their biggest gold and silver seasonal buying period starts like in early September and goes through December with festivals and wedding seasons and all that stuff that they observe and celebrate in India in the fall and in the early winter. And historically, I believe, and again, don't quote me on this, this is just sort of horseshoes and hand grenades calculating, but I think roughly 2/3 of India's demand historically for imported gold comes between August and December.
Well, that would make the most sense because, like you said, that's their wedding season. They have the Diwali, this big festival, and I mean, there's a lot. They have a lot going on during that time, so it would make the most sense that would be their heaviest buying time.
That's right, and then it's also some religious observances for a lot of the Eastern Hemisphere countries. So, and I don't even know if we need India to push the price of gold higher, because it's been going up without them. Even though we can't monitor, we don't know how much smuggled gold is making its way into India. It's probably fair to say a lot more than people realize and is being accounted for, but certainly not as much as, not even close to as much as it would be if their legal import venue was operational right now, which it really isn't.
And it hasn't been for several months.
Not since March 1st.
Well, there you go. I mean, so their numbers are muted, and like you said, the smuggled gold, don't know. I mean, we could guess all day and it wouldn't matter. And China, I mean, they didn't. I think it was May that they didn't. The People's Bank of China didn't import any gold. And my theory on that is that China was taking a break, and it's just a theory, to allow Russia to acquire more gold so that they could kind of get more in line with each other as far as their gold holdings.
Right, and that, we don't really know how much gold they were actually buying. I mean, I'm not sure where you got the number that they didn't buy any. They may not have increased their official stated reserve in May. I don't know. I don't really follow it that closely because no one knows. It's impossible. See, here's the thing. In China, every ounce of gold that is consumed or purchased in China has to go through the Shanghai Gold Exchange, except the gold that the People's Bank of China buys. They don't have to buy their gold. It doesn't have to be processed through the Shanghai Gold Exchange. So the only way to track gold imports into China is through the numbers that Hong Kong publishes. But guess what? China also imports gold via Beijing and Shanghai. And those numbers aren't reported. So we really don't know. And that could be the gold that the People's Bank of China is buying. I think everyone assumes that the 400 tons of gold that China produces every year is just consumed by the People's Bank of China. I think that's just a given. But then you've got these two avenues of importation where numbers aren't published. So no one can talk about that. I don't care what anyone wants to say or guesstimate, what the World Gold Council says, what Jeff Christian wants to say, what Bron Suchecki wants to say. They don't know. No one knows.
No one knows.
Exactly. So when someone says, well, the PBOC didn't buy any gold in May, well, how do we know?
Well, I'm talking about the gold.
You can't go by the number that they say, oh, this is how much our gold reserves increased. And it's possible they may not have increased their gold reserves for May.
No, they report, and they began reporting their official gold holdings that the People's Bank of China reports specifically for the IMF, or the International Monetary Fund, for the purpose of satisfying their inclusion in the special drawing rights, the SDR. So they have to report any gold that they officially acquire for the People's Bank of China. So they have to do that in order to maintain their status with the SDR and the IMF. Period. So,
well, hang on. They have to report some gold, or they do report some gold, but that doesn't mean they're reporting all of it.
Well, no, that's
the U.S. government reports some inflation, but they're not reporting all of it.
Well, that's true. That's true. But for them to throw up a goose egg, I mean, that's kind of like, well, okay, that's weird.
Well, and who knows what the motive is? The price of gold's run a lot percentage-wise since mid-December, and they may say, well, let's make the world think we're not buying any more gold, so they stop front-running us.
That is a distinct possibility.
Right. I mean, again, no one knows. It's all we can do is speculate on it, and there's just no way to know for sure, because that's one of the. And there's a article, and I don't know if I still have it saved, and I think it actually is specifically mentioned. You can dig up on the internet what the regulations are for importing gold into China and distribution of gold in China, and it says right in the thing that China keeps its central bank gold holdings a guarded secret. So, and I don't think there's anyone under the sun other than idiots like Jeffrey Christian, etc., who really think that the numbers that the PBOC is reporting for purposes of the IMF is the real number. It's not even close. And know that.
Probably not. No, I just know that they reported nothing for 1 month. That's all that I know. As far as what they have, I would agree wholeheartedly that they have a lot more than what's being reported, even at the People's Bank of China, at the PBOC, much less what they have scattered around in the SAFE SAFE accounts, which they don't have to report. I mean, there's no telling what they have in those accounts.
Exactly.
So, I mean, as far as how much gold, and like you pointed out, and we've discussed numerous times, the gold that goes through Beijing and Hong Kong is not reported, or Shanghai.
Shanghai. Hong Kong is reported.
So it's just not, who knows what they're importing. We know that they have a lot of gold. Like you pointed out also, Dave, we know that they are mining somewhere in the neighborhood of 400 to 450 tons per year. We also know that not one single ounce of that ever leaves, period. And it's not reported. That's not reported. You know that where that all that gold is going to. None of it. Not an ounce. We don't know where any of it is. So, like you said, World Gold Council, Jeffrey Christian, all these people that say that they know, they don't know. They don't
Right.
know. They don't have a clue. Just like you and I. We could start making stuff up. I think that's a good idea, Dave. Why don't we just start making stuff up?
Well, then it wouldn't be called the shadow of truth. It would be called the shadow of fraud.
Shadow of fraud. We already have that. Oh, oh my goodness. Well, have we given them enough to chew on?
I think that's a pretty good place to wrap it up.
Yeah, laughter is always a good spot to end. Well, Dave, it's always I'm glad you're home. I'm glad I'm home. Glad everybody's home, and hope everybody out there's had a good summer so far and loaded up on mining stocks and all the physical gold and silver that your budget will allow. And Dave, I guess we'll catch you on Monday and see where we stand.
Sounds good to me. I'd just like to add, just to kind of end on a good note, if we could give everyone a group hug, we would, because it's going to start getting really weird and rocky, I think, from here on out with what these guys are doing to the markets.
Well, I'm in
So
on that.
hold on tight, and hold on even tighter to your metal.
There you go. And all metals, including lead.
Including lead.
Well, all right, Dave. We'll talk with you soon.
Sounds good.